So yesterday I went to a real estate conference for multifamily real estate here in Newport Beach, and all the panelists were either had multiple billions of dollars worth of multifamily assets under management, or they were on the debt side of the game, and they either funded and or continue to fund multiple billions of dollars worth of multifamily deals, whether that's new development, existing stuff, people that do what's called value add, if you're new to this, but value add assets, meaning they fix them up and increase the value. But the big thing I wanted to share with you guys is the massive opportunity that I continue to talk about. I'll continue to hit home with it. We are ahead of the curve in this, and I want to share this with you guys so you stay ahead of the curve, whether you're doing this on your own or you're looking to invest with us. I just like to share this because truth is, those guys ain't going to leave there and make a video to help their audience of people that they continue to communicate with. They only deal with family offices, institutional investors, high net worth individual people that are already wealthy. They're not going to the everyday investor like you guys, which are my people, because I feel more comfortable around everybody. So, anyways, I want to go over those things that I took away, how and what I'll share with you guys how I'm going to take advantage of. So, number one thing I learned is there's $900 billion, well, there's $2 trillion worth of debt over the next few years. This is commercial debt that is maturing and or has matured, or it's in technical default. In multifamily or commercial debt, what happens is if your value of your assets drop below a certain amount, that's technical default. They don't take your property, but it starts getting looked at. It goes on what's called a watch list. So all of a sudden the lender starts to look, because like I said, if you watch any of my videos from multifamily commercial, the bank and your debt is your partner. So when your partner starts to take a look and say, look, the value of our assets went down to no fault of the operator, we have to start protecting our investment, right? Which means we're going to start watching it. What's happening? So that's happening right now. So $900 billion of debt, commercial multifamily debt across the United States is now being looked at, and it needs to be, one, refinanced, which can't be. No matter how hard they drop the rates even over the next quarter, they cannot catch up to what needs to happen, because all this debt is under fixed debt, meaning like it fluctuates with the rates. So $2 trillion has to be reset over the next few years. Over the next year, about $900 billion. And then in 2020, that's in 2025. 2026, I think it's another $700 billion also needs to be reset. And then this $2 trillion will have to happen, period, over the next 3 to 5 years. It needs to be done. It's going to have to be done. It cannot stop. It is happening, guys. So that's the number one thing that I learned. And I also got the opportunity to hear from these guys about what they're seeing going on in the marketplace. So this right here is a massive opportunity. And I'll go through what that really means and how we're going to take advantage of it towards the end of this video. So that's number one. Number two, the next focus that look, this is the different game, is location. All the lenders are more interested in the asset's location than the actual asset itself. Because every lender, that's like all the debt guys that were there that do billions of dollars worth of debt, they're like, hey, look, primarily the biggest challenge that they have is with builders. They're called merchant builders, guys who build multifamily assets. And I'm talking about institutional quality, which we'll go into next, like 200, 300, 500 units, at the least, maybe 150 units, but they're more interested in A locations. Right. So right now, this $900 billion is in A locations. This isn't like 2008 or in the 90s when they had a real estate problem. This is about institutional money. This is not mom and pops. This is not doctors and lawyers and attorneys that three of them got together and they bought a 15, 20 unit deal in your local town or whatever. We're talking about Boardwalk and Park Place. This is the locations that this is happening at. This has never happened before. As a matter of fact, I think this happened maybe 20 years ago, 30 years ago, maybe, when you had the big boom of high-rise development in all these different areas where you started watching Austin grow, Dallas grow, San Diego and LA grow. You started watching New York grow. You started watching these other areas, these major metropolitans grow. This is happening right now. This is the opportunity, guys. My whole mind was changed. It really, well, two things. It changed my mind about what's really happening. And the second thing, I'm doubling down 100,000% on the direction that we're already headed in Bell Capital. And number three, which is what I was alluding to here. It's the institutions. This is institutional, all right, assets, not asses. The institutional asset is here because this turns into quality and scale. Scale as it relates to institutions really means the number of units. The number of units is the most important thing when you're looking at a real estate deal. It's not ones and twos and fours and fives. The way that is the institutional thought process behind this is how big can we go, right? So as you start looking at this for the deals that we're looking at, it's anywhere from 180 to 250 units and above. So, but the quality of the asset also matters. So now when you start getting here, and you start, let me put this into perspective for you, the opportunity here, right? Especially if you're going to invest. This has to happen. These deals are going to trade, whether they trade hands or they trade money, meaning like they have to get refinanced and new money gets brought in and then they reset the cycle, right? Now, if they reset the cycle today, the debt on those deals when they're doing them, institutional investors, meaning like they're partners or institutions, or they're institutions and they have these deals. They're not going to go get 10-year debt or 7-year debt like we will. The longer, the safer. They are institutions. They have so much money going on. They have to return that money because they get paid fees, right? So, but if they go and refinance, even at a worst case scenario, they're only going to do it for 5 years. 3 years, 5 years, and then they're going to be like, hey, what's the rate's going to be 3 years and 5 years? Which means those assets are going to have to either sell or refinance again. So that's the big thing. But if it's an institutional asset, meaning that it's an A property and it's 200 units or so at an A location, the value is already going to be set. But if they do come to market, they're going to sell at somewhat of a discount on price, or if it's not a discount on price, because the value, the operations aren't bad. The properties are still operating good. It's the debt. They're going to sell to satisfy the debt. And that means whoever the operator is, if they have an institutional partner, the partner's going to be like, dude, sell this thing, get us out of the debt, get us our money back, let's move on. That means that there will be a compromise on price, right? The competitive advantage we have is that we aren't using institutional investors as partners, right? Because these deals break down like this. All these deals, all real estate happens like this. You have your real estate assets, they have debt. Can you guys see that? Good. There's debt there, and then there's the equity. This is either done through banks, Fannie Mae, Freddie, or some life insurance company, or some type of a debt fund. This is done through institutions. This is your partners, right? That's Goldman Sachs, that's Blackstone, BlackRock, any other institution like that. Or you got pension funds. You got the pension fund for like CalPERS. You have the Harvard Endowment, which is like a $50 billion fund. Like this right here is the thing. Now, that all real estate, institutional quality real estate, it has these two components. The way that we're looking to do it is we're just crossing these guys out. And we're going to my friends on Facebook, Instagram, YouTube, and we're going, hey, do you guys want to take a look at these deals? There's no shortage of money. So rather than go to them, we just bypassing them and go to them. That's where this gets exciting. Because here's the thing, and I'm going to share this, and it sucks and it stings at the same time. The people at that conference that I listened to, they are not going to retail investors. They don't go to the little everyday investor, the business owner, the salary. They don't go to Victor and say, hey guys, we got this opportunity in a deal. Do you want in? They stick to, like I said, Goldman Sachs. They stick to Blackstone. They stick to that world, family offices, the wealthy. They aren't coming to guys like us and saying, hey, you guys have all this money sitting on the sidelines that you've saved up. Do you want to get into these type of assets with us? That's the opportunity. The reason why it's an opportunity is because when you go to Blackstone or BlackRock or Goldman, it takes time. So our competitive advantage at Bell Capital is rather than go to them, I just go to my friends and go, hey, look, we found the deal. We're going to fund the deal. We're going to manage the deal. Do you want to get in on this deal and invest money? You do that, we're getting the same assets these guys are having. The institutions, the same assets, we're going after the same assets. But the difference of it is we can act faster than them. That's the opportunity. And like I said in our past videos, this is the goal. I tell you what my goal is at Bell Capital for at least the next 12 to 18 months. We take down 1,000 units. The goal here for me to do that is $300 million. I'm going to put together $100 million for equity with partners, with you guys, right? to be able to invest. And if we can get 5% return on our money over that time and then double on our exit, that's the game. I know that I can do this right here. And I'm not talking about bad properties. I'm talking about best properties in the best location in the best city in the world and do it with everyday people like you. That's the play. That is the massive opportunity that's coming up. Never in your lifetime, never in my lifetime has this opportunity ever presented itself. One, because I didn't know what I was doing. I was still young. I was messing around with 10 units, 20 units, 40 unit deals, C-class properties, chasing all the stuff that probably you guys that watch this do now, or you were taught to do, or you're learning how to do. Just stay away from that. This opportunity right now is going to allow the little guy, for the first time in my life, the access to get institutional quality assets, because very rarely does this happen. Even Warren Buffett said it. Look, I would buy 100,000 homes if I can buy them all at one time. The reason why they don't buy a lot of real estate, as guys like Warren Buffett and stuff like that, is because they can't do it at scale. And real estate, on the average, because Warren Buffett says this too, is actually priced right, except when there's a debt issue, when there's financing issues. Now is the one of the very few times in our lifetime, and it won't happen again probably for another 2 decades, 20 to 30 years, that the debt needs to be redone, reset on all this commercial real estate because of what happened between COVID and also being able to reset because all of this cheap money that continues to get printed off, given to everybody, they lower the rates, print more money, inflation happens. Now there's a reset in the capital markets, and it's allowing great locations and institutional quality assets to be available like never before. This is happening, folks. And if you don't take advantage of it, whether you do it with yourself or you do it with us at Bell Capital, you're going to miss the boat. I can probably say now, between now and the end of 2026, that door will shut, close, and it will not open again until 2046. 2046, it'll probably take 20 years for this type of scenario to happen again, unless there's some world calamity. I don't know what that'll be, but I can promise you at Bell Capital, I'm getting poised to set up to do this. And I would love to have you guys do it with me. And I keep showing it to you because I want you to see it. This is what we're going to do here coming up soon. 12 to 18 months, we will have 1,000 units, $300 million worth of real estate. I'm going to raise $100 million to do that from everyday regular investors like you guys, because we are going to take advantage of this massive opportunity that's going on in real estate right now. And I want to invite you guys to do it too. So look, if you guys have questions, go to bell-capital.com. That's bell-capital.com, and then register your account. Let me know that you're interested. Somebody, myself or someone on my team will reach out to you. We'll find out we'll answer any question you have, find out what you want to do, how much you want to invest. First, you got to be accredited to invest right off the bat. I'll be working on a Reg A fund later down the line so I can help more people who are not accredited. But for now, you got to be accredited to invest. And if you're going to do this, just register. I would love to talk to you. I know you have questions. I want to answer them, or somebody on my team can. We will show you the deals we're looking at so I can tell you how exactly what my plan is to do this. I can show you the deals, show you where we're at, everything. Totally transparent. So again, bell-capital.com, register your account. Somebody will reach out and talk to you, or you can schedule a call, spend 5 minutes, answer any questions, ask any questions you have. We'll handle it like that. But I wanted to share with you what I took away from yesterday. These are those 3 things. Big correction coming. It's been happening. It is on the cuff of happening. You watch rates get raised. Everybody's going to be running to the starting line, and the gun's going to go, and people are going to start running. But not everybody's going to make it to the finish line, and you got to be involved with people that are. Number 2, location. The location that you look at currently. If you're doing this on your own, you need to look at a better location. If you're looking at B locations, look at A's. If you're looking at C's, looking at B's. If you're looking at A, look at A+. You need to look at premium locations over this next 24 months. That is going to be your score. You're looking for a score. You're not looking for, you're looking to win here, something to change your life. Last but not least, you look at, raise the quality of assets that you're looking at. We were looking at properties that were 2000 built, 2000, maybe went up to maybe like 2006. Now we're starting to look at 2024, 2020, brand new stuff, merchant builders that have to come to market. Those are the assets that are going to come to market and trade. Never before will you get the opportunity to buy multifamily assets straight from a developer merchant builder, something that's 2, 3 years old that you can get a hold to or invest your money in, because this is the time to be able to do that. It's never been done before, not in my lifetime. In my lifetime, if it was, I was a kid and I freaking missed it and it sucks. I won't miss this one. I promise you. So do this with me. Want to have you with us. I hope this video helps. But these are the things that I learned from listening to multiple panels of people who are dealing in the billions and billions of dollars worth of debt and financing, and or they're dealing with merchant builders who develop billions of dollars worth of multifamily stuff that's either online and on market now, or they have to trade over the next 18 to 24 months. That is happening, guys. And I want to help you guys take advantage of it. And I want to do it with you together. So like this video, share this video, comment on the video, subscribe to our channel. We want to get our subscriptions up. And if you have comments, leave it in the comments. Questions you have, we look at every comment. We do respond to them. And if you have a video that you want us to shoot, leave that in comments as well, man. I love to see your comments. And we will make sure to get that information out to you guys. All right. So have a great day today. Let's get it. Let's go. Let's do this together, man. I'm with you. Let's go. I'm pulling for you. Boom.